I'm your host, Mark Hairston. It's glad to be back with y'all once again. And our goal every week is to bring to you some information, hopefully that will help you make better decisions when you buy real estate or you invest in real estate or refinance or build. And so today this is kind of part two of some FAQs I'd put together a while back with my marketing director, Leanna Borsellino. You say hello.
What? Hello.
Glad you're back with me. And today, again, we're going to do sort of an interview, FAQ, you know, interview, so we can go through some questions that hopefully will build some value and some knowledge for you guys when it's time to get a mortgage loan. So let's get started.
All right, let's get started. Okay. Question number one. What is the minimum down payment required?
Okay, that's a great question. We actually covered that a little bit last time, but I wanted to hit it again because there's a myth around a lot of people who think they have to have 20% down to buy a house. And that is just, like I say, just a myth. I mean, we have loan programs with veterans and some other type of programs for first-time buyers where you don't need any money down.
I tell people that all the time.
Yeah, and it's shocking because most people still think they have to have 20% down. Even a friend of mine from Fort Worth, I've known since college, called me this week to buy a house for his daughter. And we were talking about strategies and types of loans. I said, look, Frank, with if she's on the loan with you, she lives there. You're not going to be living there. He's got his own property, but he's going to help her buy a property. I said, you can put down as low as 5%. He assumed he had to put down 20%. He said, Mark, I hadn't bought a house in 30 years. I don't know, Even though he owns his own home out free and clear, he just wasn't sure about the guidelines. So the point around that is a lot of times first-time buyers can do 3% down or 3.5% down. It does depend on your credit score. If your credit scores are fairly low, I'm now writing a loan for not a young couple. They're a couple moving from California. They've lived in California their whole lives. They're in their mid-40s. They've never been able to buy a home out there because it's so expensive.
Mm-hmm.
And but they have a little bit of money saved up, but his credit scores are in the 620s. So it's not what I call A paper. It's not terrible. We can still help him, but that's going to be an FHA type of loan, 3.5%
Right.
down. And so that's the best product for him.
Actually, I think that's kind of encouraging, though, because the fact that you can even do an FHA loan with only 3.5% down with having a low credit score is a big deal. And I think most people automatically assume if they have a lower credit score, they can't get approved.
That's right.
And then they're kind of lost, and most people that I speak to believe they need that 20% down. So,
yeah. And his name is Brian, my client out of California, and he's currently paying $2,500 a month for a half of a duplex in California.
Oh my gosh!
And that's about his budget for a mortgage payment. We can go out to the Belton area or whatever and get him a $300,000 property with the same mortgage payment.
Yeah.
So he's excited about that.
I'll be excited about that too. Okay, next question. Are there any additional fees or closing costs?
Yes, there are. And I want to hit that too, because this gets a little confusing, not confusing, but it's a wake-up call for people when you start talking about closing costs. And closing costs are third-party fees that are associated with appraisal costs, lender fees, underwriting, title companies, recording, attorneys, et cetera, et cetera. And those usually run around $4,000. So I was talking to another young couple yesterday. It's their first time, I was going through this with them, and they were under the assumption that they had to pay all those fees. Okay, there are hard costs that have to be paid, but I said, look, I would negotiate the seller to pay some of these or all of them. Okay, because by contract, they're putting down 10%. I said that by mortgage contract, the seller can pay up to 6% of your loan amount toward the cost, including buy down fees.
Mm-hmm.
So they haven't written anything up yet, but he noted that because he thought he had to bring the 10% and all of the costs, which somebody has to pay for them. But I said, look, in this market, sellers are very negotiable. Most all our contracts have some contribution.
Yeah, I've noticed a lot of that as well.
You were talking about one of the deals you did.
Yeah, just recently we closed on a house in Round Rock that was listed at $300,000. My clients were cash, and so which gave us a little bit of buying power there. But they really wanted to negotiate a lot during the option period, and somehow, by the grace of God, we found quite a few things. And the roof, there had just been a hailstorm, which benefited us greatly because then we were able to request the seller to file an insurance claim, and then we got the roof approved. So we ended up getting, I want to say, about $23,000 back in credit. Yeah.
Well, I want to do a plug for you too, because besides being my marketing director for my company, Texas Mortgage Source is my company. Leanna helps me with my social media and my video marketing. She's also a realtor in town. And tell them how to get a hold of you.
Yeah. What?
Whoop.
Well, my email is Leanna, Leanna, at havenhomesaustin.com. Or you can call me on my phone, which is 310-502-8452. I am a native Austinite. I was born and raised in Austin, grew up in the Round Rock area, so I feel that I know Austin like the back of my hand, and I'm very comfortable with all the different areas here. So if you have any questions and want to reach
Please
out,
do. Please do.
You're
You're available.
girl. That's right. So, all right. Okay. So, next question. What are the different types of mortgage loans available?
Well, there's conventional financing, there's FHA loans, there's VA loans, there's USDA loans, there's investor loans, there's hard money loans, there's all sorts of types of loans to get. Most of them are going to be more traditional financing where we have to have a decent credit score. We verify your income. You have to put down a little bit of money, possibly. But there's other alternative sources for investors that they don't need to verify income because they use a rule of cash flow. They look at the property, the investor who makes the loan says, is this property going to cash flow or not? And if it does, then they don't care that you have tax returns filed with them or anything else.
Mm-hmm.
They're just saying, look, you have decent credit, you can put down 20%, we'll get you a mortgage.
Right.
I'm even doing a loan now for a woman who's she's worn out of Austin. She's been in Austin a long time. She's moving to Fort Worth. And she's got a home for sale, or will be for sale, and she's with around 300,000 of equity, and she wants to buy a property around 500,000 in Denton area. So she needs to borrow a couple $100,000, but she doesn't really have a job. She does some part-time work, but she doesn't have enough income to qualify.
Really?
Yeah.
Even though she's got that 300,000 in equity?
Yeah. Yeah. Well, she has a little job on the side selling antiques or refurbishing antiques, but she doesn't make enough money to qualify for a $200,000 loan. But I do have a product where it's called a no doc, where if she's putting down that kind of money, she's got great credit. We can get her a mortgage.
That's awesome.
Yeah. She's very happy. She got
imagine.
turned down twice by her bank.
Wow.
Yeah.
Yeah. And there's some nicer homes in that area too. So it's kind of moving up a little bit. So
yeah. You get a lot more for your money in Denton, Texas.
Yes, you can. Okay. So next is, what is the difference between a fixed rate and an adjustable rate mortgage or an ARM?
Well, most people these days are going with fixed rates. And because when I got in the mortgage business in 1985, fixed rate loans were at 13.5%. Okay. Think about that. Yeah. And they were down from 17 before that. So adjustable rate loans were not even available until about 86 or so. And the first one that came, I'll never forget it, Citibank had a loan at 9.875% for 1 year. And that was really good.
Yeah,
that was 3.5 points less than the fixed rate. I mean, yeah, that was like, wow, you could do an adjustable rate loan. The problem with that mortgage is they didn't have what they call caps. It could go up as far as the market went. So people got in trouble with those early ARMs. So now they're much more conservative. There's caps on how much they can raise the rates. But the problem right now is the inverted yield curve between the long-term rates and short-term rates. We don't really see any adjustable rate loans except in the HELOC market. The HELOC market we talked a little bit about last week, where you want to borrow, possibly take a line of credit from your home. I have one on one of my properties. I don't owe anything, but if I were to borrow against that line of credit, my rate would be close to about 9%, and it fluctuates. It used to be down to 5%, but it's down up to 9% now.
Yeah, the HELOC is something I'm exploring right now.
Yeah.
So I won't be ready to do anything till the springtime, but is one of the
It's a very good tool to have. I'm glad I still have it on my property, because if I needed to write a check for whatever reason, I can access it.
Okay. Yeah. Okay, so what are the eligibility requirements for a mortgage loan?
Well, number one, you have to be 18 years old. Okay. Are you 18?
Got that. Almost 40.
Got that. And you have to have some legal way of being in the country, whether you're a U.S. citizen or you have a green card or you're here on a work visa. I'm doing a loan now for a couple in Circle C. They're both from India. She's with Amazon. He's with I forget who he's with, but anyway, they both have work visas, and so they can buy a property using their work visas as a residence. Now, there's certain people, especially from the Mexico area, that don't have any sort of documentation, and we even have some banks that'll do loans what they call I-10, which an I-10 number is like a tax ID number. But you do have to have a social security number, but you don't have to be here, if you will, legally, which is interesting.
Yeah.
I mean, we don't do many of them, but there's some banks up in the Michigan area that'll do them with 10 or 20% down.
Let's see here. How long does the mortgage approval process typically take? So if someone was just coming here and they want to move tomorrow.
Quickly. Yeah. And I get that question a lot. I get it all the time, as a matter of fact. And I tell people I like to have a 30-day window we can. Okay. It's because the appraisal process sometimes can take a little bit longer, although it's been much faster than it was, a year and a half ago. So normally we can close a loan within 3 weeks. Now, what we're seeing, nice. and I tell people, I don't know until you actually apply and you're under contract, but sometimes, or more and more times these days, the conventional market does not require appraisals. Like I got 2 appraisal waivers last week on clients, so we don't need an appraisal.
Yeah.
And that's the case. We can close usually within 10 days.
Yeah.
But sometimes that's not convenient for the seller either. So everything's negotiable, but there is a contract date we're all trying to meet. But to answer the question on VA loans, FHA loans, we'd like to have a 30-day window with the understanding that we can do it faster if necessary.
Right. But actually, it's funny that you say that. Some people want to close fast. My recent clients, one of the things we thought we had for buying power is they could close quickly. Well, it didn't really make a difference with the seller because we still had to get documents from her brother that lived out of state.
Oh yeah.
And there was.
Didn't you have one in prison or something?
Yeah, there was a federal prison issue going on.
Yeah.
But we had no control over that, and the federal prison system does things their own way.
That's
so
right.
You're just waiting at the mercy of them for whenever they feel like sending over the documents. And there was nothing holding up the man that was in the prison.
Tell that story real quick.
Okay.
Just a short cliff notes of it.
So the seller, she is in her 90s and she came down with Alzheimer's. And so her children were the rightful heirs of her home. And so they needed to sell it, but they wanted the money quickly for her care.
Okay.
So they didn't want the money for themselves. They want to take care of their mom.
Got it.
And so she had 3 children. Well, one of her children was in a federal prison. And so, yes. And I won't get into what it was, but he very much wanted to help his mom. So
that's nice.
He wasn't holding anything up.
Yeah.
He wanted to sign. It just took it was a drawn out process. The prison wasn't communicating very well with if it was signed or when. So we were just kind of in limbo. Closing, or I guess releasing of the funds got delayed a little over a week, but eventually it all came to pass.
Good.
So it all worked out. But yeah, that was a fun
that's
experience.
That's an adventure. That's an adventure. Real estate can be an adventure, that's for sure. Whether it be property condition or seller being AWOL or all sorts of things coming up.
Yeah, absolutely. Okay, so on to the next question. What documents do I need to provide for the loan application?
Well, typically, we need to provide, I tell people we go look back for 2 years. Everything we do is around a 2-year history, primarily income statements for 2 years, W-2s or tax returns. My friend in Fort Worth is self-employed, and he has 2 companies. And it's a hassle because he has to provide 2 years of personal returns plus 2 years of corporate returns on his businesses.
Yeah.
So I'm in contact with his CPA because it's a lot of paperwork.
Yeah, I can imagine.
And but typically for employees of a company, let's say Dell or Amazon or Facebook or whatnot, it's 2 years of W-2s. We need pay stubs, last month of pay stubs, and verification of down payment. Now, my buddy Frank is actually borrowing the down payment from some life insurance. He's in the life insurance business. So he has like $200,000 of cash value built up in these policies that he can access. That's where he's getting his down payment. So I said, that's no problem, but we have to paper trail it. Okay. So when the insurance companies send you that check, they're not going to wire it. They're just going to mail them a check. I said, photocopy, so we can document and paper trail it.
Yeah.
So everything's big on paper trailing money, particularly. And then we have to run your credit and get a copy of your driver's license, and in some cases a visa or green card.
Okay.
Not a lot.
Yeah. What are the consequences of defaulting?
Not good.
No,
not
I would
good.
assume
Bad.
not good. So what happens?
Bad.
What are those consequences?
Well, the consequences typically are you're going to have to wait if you have a foreclosure or short sale. Yeah. Okay. Short sale is defined as selling a property for less than what you owe on it. Okay. And that's not so much common now, but it certainly was 10 or 12 years ago with a lot of short sales because prices had come down. and people are selling property for less than they owe. That's called a short sale. It's not as bad as a foreclosure. Foreclosure is when the bank actually takes your property back and then they sell it.
Right.
A short sale is where you actually sell it yourself because you're still entitled. But the consequences are usually you got to wait 4 years to get a new loan. Okay. Bankruptcy is a little bit more lenient with FHA. You have to wait at least 2 years. So it's not forever, but you do have to establish new credit, and you have to wait at least 2 years from the discharge of a bankruptcy. A foreclosure or short sale is usually 4 years.
Okay, so you would recommend the bankruptcy, declaring bankruptcy?
Well, I would, bankruptcy or foreclosure, but eventually, unless you sell the property, and most people who file bankruptcy are doing it temporarily to stay in their home for a while.
Yeah.
But if you can't make the payments, they're going to come get it.
Right.
You know, and that's not a challenge as much now as I saw a chart yesterday compared to 2008. It's way down because most people have
yeah, right. There's
way
not
down.
that many.
There's
at
not
all.
that many. You know, there used to be thousands of them actually in Austin and around the country for sure. But nowadays, because we've had such a good appreciation, most people still would have some equity position where they could sell even if they had to take a little loss.
Right.
You know.
Yeah, I actually think that is very encouraging, actually, knowing that there's so few foreclosures out there. My clients, the cash buyers, they were initially interested in a foreclosure. But there weren't any in any of the zip codes. So we had to, kind of switch and change angles a little bit.
Yeah.
But yeah. So
my first home in Austin I bought in 1990 was a foreclosure.
Yeah.
Because that was a bad economy back in the late 80s and early 90s. And there were a lot of foreclosures. It was a really good deal.
So let's say right now someone gets in and they get 7% interest rate or something like that, a little high. Can they refinance their mortgage loan in the future?
Absolutely. That's a very, very common, not only common question, but common conversation, because the idea is that, we've talked about this in the past, even on this show, that, now I still believe now is a very good time to buy. I think that even though rates are higher than they were last year or 2 years ago, that prices have come down to where it makes it manageable for most people to buy a property. And as interest rates do come down, and for everybody that I follow, we think it's going to come down in the fives, maybe next year or the year following. If you're sitting at 7%, you get a couple percent off that on your 5% rate, it's going to save you a lot of money.
Absolutely. Also, you're getting really good deals on the houses right now. So
that's right.
With a little bit higher interest rate, and then you refinance in another year or two.
Yeah.
And you're really sitting very, very
And my clients I was talking about a minute ago that are buying in Circle C, they're going to negotiate a 2-1 buy down. Okay. So it's 6.5%. I can get them 4.5% the first year, 5.5%, and then 6.5% fixed. And the seller will pay that cost.
That's awesome.
Okay. Yeah, it's awesome. And if they refinance within 2 years, that money is actually their money that's put aside by the seller to pay for the buy down. They can use that as to pay for their closing cost.
Those are some of those great deals out there.
Yeah,
that people are
getting. It's
a
good strategy.
Yes, it is. Okay, so what is the difference between pre-qualification and pre-approval?
Well, that's a great question too, because if you go online and you're dealing with Rocket Mortgage or one of those online lenders, that they will pre-qualify you. Okay, which means it's a phone conversation. They may run your credit, and that's about all they do. Okay, pre-approval is where we bring in all the paperwork we're talking about, and we have another underwriter look at it and, if you will, bless it, and you're pre-approved. Well, throw some holy water on it or something. But they will say they're good to go. That's pre-approved.
That's
awesome. And then I can write a letter of that effect, right away.
And then we start house hunting.
Yeah, we start house hunting.
You don't start before you get that letter.
And we get to what we call the celebration day. Some people call it closing day.
Yeah. Okay, so can I choose my own homeowner's insurance provider?
You sure can. One of the things we do on the loan estimates when we estimate the payment and the cost of the loan is insurance is a big part of that.
Yeah.
And
do you have any recommendations?
I do.
Yeah, let's hear some of those.
Well, I recommend usually a guy with State Farm and then some independents too, because I like people to have options.
Right.
I've got a good friend with the Goosehead Insurance Agency, and he's usually very competitive as well.
Yeah.
So or you can just use your own carrier, whether it be Geico or Allstate or whomever, But we like to get that handled up front because it's not that easy to get. I say it's not easy. Insurance companies these days are fairly conservative on like the roof. So the roof's not in good shape. It's going to be hard to get insurance. So I have one now in Belton, as a matter of fact. He couldn't get insurance, and it turns out there was hail damage. So the seller did agree through the insurance company to put on a new roof, and we're waiting for that to be done to close. We were supposed to close Monday. Well, he waited to get his insurance, and he said, "Well, I can't find insurance." But so it turned out they could make a claim. They replaced the roof. Everybody, it's a win-win.
Right.
He's very happy about that.
That's awesome. Okay, so a lot of people out there have, slightly lower credit scores. What is the required credit score for a mortgage loan? Like, what if you're like below a certain number? Like, don't even try.
Usually 580 below. You can't.
Okay, so actually below 600,
that's right. You can still get an FHA loan.
Interesting.
Yeah, most likely. Now you may have to put down 5% as opposed to 3.5%.
Okay.
Okay, so if you're under 620, FHA is usually going to want a little more money down. Okay. Conventional financing, forget about it. Okay, or investor loans, forget about it. But FHA and even VA loans will allow. Not every lender will do them. That's why I'm a broker. I shop different lenders out because not every one of my lenders will do under 620. But some will, because FHA will buy those loans. They're just a little bit riskier.
Right. Which is why people need to call you, because you shop around and get them the best rate. And if anyone needs to get approved and they haven't been approved and they could possibly get approved, Mark can get you approved.
Amen. So let's tell them how to get that done. My phone number is 512-789-6967. It's Mark at markhairston.com, Hairston. And my company is Texas Mortgage Source, based right here in Central Austin.
Awesome. Okay. One final question. Can I lock in the interest rate? And if so, for how long?
Well, that's a great question. We can lock loans up to really 9 months. Okay. Now, there's a caveat around that, because people who are building homes, they're saying, "Hey, Mark, it's going to take 9 months to get this home built, but I don't want risk the rates going up to 8 or 9%, which I don't think they will, but you never know."
Right.
And so some lenders will do what they call an extended lock for new home construction. Now, the rates are not what you can get if you can close next month. Okay. And they usually charge not a premium, but they charge a fee up front, usually 1% of the loan amount to ensure the lock. Okay. But that 1% can be credited back to you at closing if you stay with that company.
Right.
Okay. So there's ways of locking loans up to 9 months or so. Typically on a resale home or even a new home that's already on the ground that wants to close in the next, 30 days or 60 days, you can lock it in at that point. But your rates are better the lower the lock term. Okay.
Got it.
So a 30-day lock is going to be cheaper than a 60-day lock versus a 90-day lock, et cetera, et cetera.
That makes sense.
Yeah.
Actually just reminded me, my brokerage, we had a client out in Cimarron Hills, and they had a new build and purchased this house. What took I want to say 2 years to build this house. It was ridiculous. Wow. And by the time the house was done, they didn't want to move here anymore. They were clients from California. They had bought this house, took forever. So they just, turned it around and put it right back on the market and sold it. So
the buyer did?
Yeah. Because they were so frustrated with how long the process took.
Yeah.
So
I'm hearing some stories of a good friend of mine is a real estate broker and also an appraiser. And he said the problem with people who didn't lock those loans in, the rates may have gone from 4% or whatever they were at the time last year to 6.5%. And a lot of them don't even qualify anymore.
Yeah. And that when they put their house back on the market is right when everything started going back up again. So I do think that had a lot to do with it.
Yeah, I do too. So that's the answer to that. But I think in the near term, rates have topped out. If they go up, they're not going to go up much. I just don't think the Federal Reserve is in a position to raise rates anymore.
I agree, especially with the election year coming upon us. So I think it's going to be, right now is a great time to buy.
Yes.
As you would agree. I think everyone I've spoken to working in the real estate world would agree that right now is the best time to buy, just simply because we're expecting to see rates drop soon. And the prices of houses are just, they're
going to go up.
Yeah.
I had breakfast with my 30-year-old son, my youngest son, about 3 boys, and I still call him my baby. But anyway, he's a CPA and very, very successful young man. And he's still renting with a buddy of his. I said, Reed, it's time to buy something, man. Nothing fancy, but get a condo or something or a townhome. Start building some equity. So maybe I'll have you call him.
All right. Yeah. Why not? So, that sounds awesome.
Yeah.
I would love to have some new clients. So
yeah.
Anyway, yeah, I think that just about covers.
Anything else you want to chat about?
Let's see here. I think, with everything, with all these common questions, I really am just also for myself trying to prepare myself coming into the new year and really wanting to learn more about all the different types of mortgages out there, what I can do that can benefit myself, put me in the best position possible since I'm a single mother. I got 2 kids. I do not personally believe in selling my house ever. I'm never going to do it.
Right.
So I need to figure out what I can do to get around that, to, begin building a portfolio and building that generational
We'll get you
wealth.
planned.
Yeah.
We'll get you planned for
So
sure.
I'm going to do it for my kids. My eyes are locked. I know exactly what I want to go for.
Good.
So I'm going to build that life for those kids. So
amen. Amen. Well, I think that's a wrap for this week, but I appreciate you being with me today, Leanna, and hopefully we learned something today.
As always, it's been a pleasure, Mark. So
all right.
I enjoy these times. So
we'll be back next week, same time, same channel. And we'll probably have some new guests on and look forward to seeing y'all about next week.